All right, this will be our last video handout solutions for the chapter. We have a trial balance here, and it's wanting us to find the errors in the following trial balance, and it tells us that all of these accounts have normal balances. Okay, that's good. So we don't have to worry about what these amounts are. We're not going to say that this 15,000 might not be 15,000. We're going to assume that it is. The same thing with the rest of these figures. Not the totals down here, but everything else up here. What would be the new totals of the trial balance after errors are corrected, and what would be the balance of accounts receivable? So we don't have anything for accounts receivable. It just has a question mark. All right, so all we're doing here is we're determining whether or not the amount shown is correctly in the credit and correctly in the debit column. If it is not, we're just going to scratch through it and move it to the correct column. So before we get started, let's go ahead and review the fact that a trial balance is in a certain order. Assets, first current assets, then non-current assets, followed by current liabilities, non-current liabilities, stockholders' equities accounts, and then the income statement accounts, revenues, and expenses. Okay, so assets have normal debit balances. So as we go through and identify our assets, we should see that every single one of them has a debit balance. I will tell you that our assets end right here. From cash down to prepaid insurance are all assets. So let's see what we have. It says here that cash has a credit balance of $19,475. Well, we should know that that is incorrect because cash cannot have a credit balance if it is a normal balance. So we're going to move that $19,475 right over here, just like that. We don't have to do anything with accounts receivable because we don't have an amount. Our next item is supplies, and if we kind of go over here, it looks like supplies are showing a credit balance of $1,000. That is also incorrect because supplies are an asset. Equipment shows a debit balance of $15,000, and that is fine. No problem with that whatsoever. Our last asset is prepaid insurance, and we're showing a balance of $500, but a credit balance. So let's just move that over here to the debit side and put a line through this 500. Next, looks like we only have one liability account, and that is accounts payable, and it's showing a credit balance of $2,500, and that is perfectly fine because liabilities have normal credit balances. We have common stock totaling $17,000. Now this is an equity account, but what we need to understand is that common stock has a normal credit balance, so this is a problem. We're going to move this back over here to the credit side, and we're going to put a line through that $17,000. Dividends are a reduction to retained earnings, so this is another stockholders' equity account, and we're showing a credit balance of $1,000. The problem is dividends go up as cash goes down, so dividends actually have a normal debit balance. So let's move that $1,000 over here to the debit column. What else do we have? It says fees earned, $49,600 over here in the credit column, and I have absolutely no problem with that. That would be correct. That's our moving into the income statement. We only have one revenue account, so let's move to salaries expense next, and it's showing a debit balance of $14,500. That is perfectly fine. All expense accounts have normal debit balances. Rent expense, $9,000, but it's in the wrong column. So $9,000, and then get rid of that. And let's see here, utilities, supplies, and miscellaneous are all over in the correct debit column. So what we have to do is let's bring up our calculator here. Close that out. And maybe move this a little bit. What we're going to do is we're going to, because we know that we're solving for accounts receivable and accounts receivable has a debit balance, let's do this. And I can also tell you that these two figures here are going to be wrong. So we can go ahead and put a line through those. Let's add up our credits. We got rid of a bunch of stuff, but we've got $2,500, but that was accounts payable. And then we have this $17,000 for common stock. Okay. Plus we have fees earned or revenue of $49,600. And let's see what else. Well, that would be it. So our correct credit total should be $69,100. Double line in accounting indicates that we're not going to do any more additions or subtractions. All right, now going to the debit side, we have cash of $19,475 plus supplies of $1,000 plus equipment of $15,000 plus prepaid insurance of $500 plus, what else do we have? We paid out dividends of $1,000 plus, and then we have salaries of $14,500 plus rent expense of $9,000. Okay. Utilities expense of $1,400. Supplies expense of $3,900. And miscellaneous expense of $250. And that equals $66,025. If we were to just subtract out the $69,100, it will show us what we're off. So not as a negative number, but as a positive number, our accounts receivable must be $3,075. So we can go ahead and scratch out this question mark, and we can plot 3075 as our balance for accounts receivable. Okay, so we have done, they actually asked us to do three things here. We haven't really listed the errors because that would take quite a bit of time, but we've corrected them as we've gone. And we have determined that the new balance is going to be $69,100 for the debit and the credit columns. And then we also did the last thing. We determined that accounts receivable is $3,075. All right, that's it.